everyone, welcome to the Q4 Mayday product updates. Thank you very much for joining us today. I'm David Tuck, I'm the co-founder and CEO here at Mayday. Really thrilled to have you join us, and I'm delighted to be joined by my co-founder Griff.
Hey everyone, yeah, I'm Griff, so I'm CTO here.
And look, this is we've been doing these for over a year now, which is fantastic, and it's really important to Griff and I to share our vision, share our plans for what we as a team are building at Mayday. And we've seen just so many benefits from that in terms of the engagement we've had from our user base that have helped shape our product direction over the last 2+ years now that we've been building Mayday and are shaping the direction to come. So, like I said, building public is really, really at our core as a company and as a team. And yeah, this is such a key part of that. So what we're going to do, we're going to look back on Q3, look ahead to Q4. After that, there'll be Q&A time at the end, but please do fire through any questions in the Q&A section on Zoom as we go. So without further ado, let's talk Q3 in review. So we launched a new pricing structure at the start of the quarter that was a really big project, and that was a real embodiment of shaped by our users' feedback. So over the kind of best part of 2 years that it had been until that point, we'd had a single price structure based on the number of entities in your group. And what we found was that we needed stepping stones for businesses at different stages of their multi-entity journey. So we took all of that feedback and channeled that into the price plans that we launched in July, whereby still based on the number of entities you have in your group, but we then had the 3 different plans: the free plan, the light plan, and the full plan. So the free plan, where you can get access to balancers, transaction matching to spot posting, asymmetry; the light plan, where you can unlock the FX and the interest posting features of Balancer, along with a modest amount of recharger and or brag usage; and then the full plans for businesses that are really sort of in their stride as multi-entity businesses who need to unlock the full use of recharger and or brag. And it's been incredible to see the response to those stepping stones. The Balancer free product, particularly for the accountants and fractional finance functions that we work with, it's been such a great solution for them to be able to deliver value with Mayday to clients without having any sort of upfront friction from needing to worry about price. The light plan is proving a great way for businesses that are still in their sort of relative infancy as multi-entity businesses, or have lots of passive entities in their group. And then we continue to see, businesses with the considerable levels of multi-entity transactions get huge value from our full plan. Speaking to a business last week who've been able to, take 2-3 days out of their month-end close, through the ability to implement recharger. So absolutely thrilled with those new price plans. They were a really big kind of project from across the team, and it's great to have those live and getting the feedback that they are. I'm going to hand over to Griff to talk the Balancer, brag and recharger product developments that we had last quarter.
Brilliant. Cheers, Dave. Yeah, so where in the past we sort of had 1, maybe 2 headline things that we were working on in the quarter, this time we had a load of relatively smaller features that we were implementing across the product suite. Obviously, the new pricing plans was one of those, and that was a lot of work from the engineering team to get that set up. But then we've also been working on the 3 products. So Balancer, we implemented the ability for you to have multiple loan accounts between the same two entities. This was a feature that a number of customers asked for. They might have a sort of a current loan and a long-term loan. They might have one with interest, one without interest, for instance. This is now easy for them to set up within the product, and they can also change the name so they can name each loan differently, so that on the dashboard screen, it's really easy to see what state everything is in. Another thing we did, which was a big piece of feedback from people getting set up with Balancer, was we removed the need for you to input conversion balances. So during setup, you would tell us, hey, you know, we want to use Mayday from January of 2023 onwards, but obviously you've got all of this historic data which goes towards your loan balances. We now pull in those conversion balances at that date automatically. So it's really simple for you to get in and set up with the product. You can do that in just a couple of clicks now, rather than having to go between your Xero files and tell us what those balances were. That's made onboarding really simple, and especially, as Dave said, for the people who are setting up, you know, multiple client accounts on Balancer, maybe getting set up with the free product, it's now really quite easy to get going. Then moving on to Brag. So one thing, well, Brag has always been really, really good at reconciling transactions into other entities in your group. So if you have a payment that's happened in one entity, but the invoices and bills are in different entities, it's been brilliant at that. But we had a number of customers come to us and say, hey, this payment or this received money was actually a combination of things that are within that entity and then in other entities in our group as well. And Brag wasn't so good at working with that. And one thing we didn't want to do was replicate the functionality Xero already gives you. It's really great at reconciling stuff within that one entity. So we've released a way that you can use Brag in conjunction with Xero's inter-entity reconciliation to do intra. I got that the wrong way around, but I think you know what I mean. There's a really good help documentation available for that takes you through the process you need to run. So please reach out to your contact at Mayday if you're using Brag and you have this problem. We can point you in the direction of the help docs, and you can see exactly how that should work. And then for Recharger, there were a couple of things that our customers wanted just to make their use of Recharger much better. One of those was the ability to run recharges at any point in the month. So it's currently the 18th of October. Maybe we've got a board meeting. Maybe I need to do a mid-period report. I want to run my recharges as they are now. I've done my bookkeeping up to the 18th of October, and I want to see what state everything is in. I can now go into Recharger and run that just as I would for previous months. I can post those recharges into my different entities, and that gives us a point-in-time snapshot of what the state is as of the 18th. And let's say next Wednesday, I need to do the same thing. I can go in, it will automatically update, and I can post those again, update those postings I made, and then I get an up-to-date snapshot at that point. Another thing we did when you're posting those recharges as invoice and bill is the ability for you to mark those as paid to the intercompany loan accounts at the same time. So within that screen, there's now a little checkbox which says, hey, when I post this into Xero, I want to immediately mark that as paid to the intercompany loan account. So this means you no longer have to go into Xero and mark those as paid or post them as journals, which was maybe a suboptimal situation for you. You can keep posting those as invoice and bills. We will mark them as paid. And again, if you're using, Balancer, that means everything should be in sync when you come to reconcile your intercompany loan accounts at the end of the month. So that's everything we worked on in Q3. Dave's going to take you through what we're working on in Q4.
Amazing. Thanks, Griff. So I'm really, really excited. So Q4, the headline act is we've got some huge updates coming to Mayday Recharger as a product. So automating the intercompany. Well, historically, just the intercompany recharging of costs and revenues between your related entities. So this quarter, so historically we've had expense rules and we've had revenue rules in Mayday Recharger. So expense rules, and that might be at cost, it might be cost plus for your expenses that you need to recharge to other entities in the group. Same principle when it comes to revenue rules. So revenue in one of your entities, some or all of which needs to flow to one or more other entities in the group. So we've had those two different types of recharge rule. This quarter, we're going from those two types of recharge rule to 5, which I'm reliably informed is a 150% increase in the number of rule types that we have as a product. So we've got 3 new types of rule coming at you. The first is intra-entity recharges. So from, like, frankly, back to before we'd even launched Mayday, and Mayday Recharge was our first product that we launched with. Prior to that, we'd had the feedback of it would be amazing to be able to do this within an entity, splitting costs or revenues between different tracking categories, different divisions, or maybe redistributing costs or revenues between different account codes, up and down the P&L. So excited that this quarter we are going to release intra-entity recharges. So the ability to redistribute those costs or revenues within a particular entity in the group. So we'll now have 2-dimensional recharging between entities, but also within a single entity itself. The second type of rule that we have coming at you is balance sheet rules. So the ability to point your rule at balance sheet codes, be they asset or liability, to pick up transactions that have been posted there. What we've seen a bunch is that people will prefer to sort of warehouse, if you will, expenses incurred by one entity on behalf of another in a balance sheet code so that they don't kind of get mixed up within that entity's P&L, and then recharge them out of that balance sheet code. And so we're giving you the ability to point your rules at said balance sheet codes and recharge from there. The third and final type of new rule that we have coming this quarter is Mayday rules. So this is for the situation that we've been encountering with our users where they'll have charges between entities, but they won't necessarily be based on specific transaction or multiple transactions in Xero. Because if we think about our recharge rules today and those intra-entity and balance sheet rules, all of those are pointing at transactions in Xero, specific transactions to look up from. What we were finding is that people would have management charges, for example, where it would be a set amount that would be distributed between the related entities. And so they wanted the ability to say, okay, there is this management charge that needs to be included within my recharges each month. And so that's what we're going to provide Mayday rules to give you the ability to do. So to create your recharges based on things other than the source transactions in Xero. So excited for the enhancements coming to Mayday Recharger this quarter. I'm going to hand over to Griff to cover the enhancements that are coming to Bragg.
Brilliant, cheers. Yeah, so we're continuing to build out the functionality within Bragg bank reconciliation across the group. And you'll know that this is a product which sits on top of Xero's bank rec screen and allows you to reconcile invoices and bills across other entities in your group. You will have seen in our Q3 update, or you may have seen in our Q3 update, that we intended to release the ability to reconcile over and part payments as part of Bragg. As we moved through the quarter, we identified other important things for us to be working on across the other products in our suite, as you heard about earlier on. And so this got pushed into Q4. So we're going to be working on this now. This should be out by the end of the year. And what this will do is allow you to assign a part payment or an overpayment to a contact in a different entity in your group as part of reconciling an invoice or bill. You'll also be able to do part payments. So if you've got one payment that was actually 4 part payments for invoices in other entities in your group, you'll be able to tell us exactly how that part payment should be attributed to the different invoices, all from within the Xero bank rec screen that we know and love. So yeah, as I say, that should be coming out later this quarter.
Amazing. So excited for the quarter ahead, and where the product suite, which is already delivering amazing value, will be able to deliver even more amazing value come the end of it. So yeah, very, very exciting. Look, that's everything we had slated to run through today. I'm going to switch over now to the Q&A. Let me just have a look through. Yes, we've had a question come through. Will I be able to use Mayday as a single entity zero user? Well, and that is so exciting. So that's a big threshold that we're crossing this quarter. So multiple entity groups who have the need to recharge between divisions will be able to get even more value out of us with inter-entity rules. But to that question, absolutely right. We will also be able to address needs of single entity businesses, likely more complex single entity businesses who have that kind of divisional structure, for example, using different tracking categories, and want to redistribute costs and revenues effectively between them using Mayday's inter-entity recharge rules. So yes, absolutely, and it's such an exciting moment for us to start to serve the needs of single entity businesses as well, alongside the multi-entity ones that we have historically served, and deliver them more value. I've seen a second question come through. How do Mayday rules work? Griff, I might hand over to you for that one.
Yeah, brilliant. So the idea behind Mayday rules, as David said, is that these are transactions which don't have a sort of source transaction in zero. So maybe it's it's a service charge or some management charge. We are currently defining exactly how this will work. Our current thinking is that you'll have sort of a single value, and you'll tell us how to apportion that between the different entities in your group. But if you're doing this already manually, we'd love to hear from you so that we can make sure that we're able to serve your use case as well. So please get in touch with us if this is something that you're looking forward to seeing in Mayday, and we can make sure that we're able to make this work for you.
I think Griff makes a really important point there, that this will be the first incarnation of Mayday rules. And his example of, let's say it's a set management charge that goes to one entity, or a set amount that gets split between entities, is the scenario we've seen most commonly from the conversations we've had to date. So it would be a sort of core one we'd address. There's so many exciting directions we can take this in as it evolves over subsequent iterations. And in due course could be based on sort of other metrics, things like gross profit before tax, etc. So really welcome people's feedback on this, because Mayday rules version 1 is coming this quarter, and then there'll be so many exciting things that we do with it in the quarters to come.
Absolutely.
And then finally, we've got a question about any more plans to develop Balancer in the future, which is a great question that's come through. So thanks very much for asking that. Yes, absolutely. We're really thrilled with the way that Balancer is performing to date, and great to see people deriving such huge value from the transaction matching. That's the core of Balancer, right? That's replacing that. Okay, I've got a discrepancy in my loan accounts. What do I have to do? I have to run off account transactions, exports from each of the loan accounts, and I have to play the in no way fun game of match the transactions up between them, so that I can find, I've got 20 transactions in one, 19 in the other. I have to manually match up the 19 so that I can find the one-sided posting. It's amazing to see the value that Balancer's transaction matching is delivering there, and the number of people who are posting their FX adjustments in month, where each month where they have different base currencies involved, where they're posting their interest, where they have that on their intercompany loans. So through the value we're delivering there, I think we see in the quarters to come, Balancer will shift back to having a kind of moment in the headline act where Recharger is at the moment, because there's such an exciting next stage for us for Balancer. Its core is functioning so well right now, and there's so much more we can do on top of that, particularly when it comes to those loan account asymmetries. Right now, we're doing a great job of flagging them to you, but what about the step of fixing them themselves? What about where there's that one-sided posting and correcting it, which, we save you a bunch of time and you can go and do that in Zero today. But there's so much we could do around helping you fix that, identifying where the other side of that has been posted so that we can help you correct that within Mayday. That's just one example. So that's the very long answer to are there any more plans to develop Balancer in the future? Griff, much more succinct than me, he'd likely answer that with yes.
I would say yes. Yeah.
There we go. So yeah, you've got the two, the two mutually complementary answers to that final question. Amazing. Thank you very much for joining us today. And yeah, just like on behalf of Griff and I and the whole team, we're so thrilled and fortunate to work with our body of customers. The engagement we get, the feedback we get from you, it's so valued. It's so motivating for us. So yeah, thank you for continuing to be part of the Mayday journey.
Absolutely. Yeah, we really appreciate it.